5 real estate tax hacks to save you thousands. What if I told you that you could be saving thousands of dollars every year, just by understanding a few real estate tax rules? This may sound unbelievable, but it's true. Most people either overpay on taxes or miss out on money they're legally allowed to keep, simply because they don't know the rules. If you own a home or investment property, you could be leaving serious cash on the table without even realizing it. In this video, I'll show you 5 simple real estate tax hacks that could help you cut down your tax bill and keep more money in your pocket. It's completely legal and totally doable. Whether you're a first-time homeowner, a growing landlord, or just someone trying to make the most of your property, these tips are for you. So if you're ready to stop losing money and start being smart with your property, keep watching. You'll be surprised by how much you can save. Let's start with one of the most overlooked yet powerful ways to legally lower your taxes if you own a home. Hack 1. Save on mortgage interest. If you have a mortgage, which most homeowners do, you're probably paying thousands of dollars in interest every year. Here's the good news: that interest can be used to lower the amount of taxes you owe. Let me show you how it works. Imagine you're paying $1,200 a month for your mortgage. Out of that, around $700 might go toward interest, especially in the early years of your loan. Multiply that by 12 months, and that's $8,400 in interest for the year. With the mortgage interest deduction, you can subtract that $8,400 from your taxable income. That means you pay taxes on a smaller amount, and that could save you hundreds, even thousands, depending on your income. Some financial analyses revealed that the mortgage interest deduction is one of the biggest tax breaks available to homeowners and one of the key reasons real estate remains a smart financial move for many people. It's especially helpful in the early years of a mortgage, when most of your payments go toward interest rather than the loan itself. Now, what if you own a rental property? Here's another hack that often gets missed, even by landlords. Hack 2. Claim property depreciation. If you own a rental property, there's a tax trick that sounds complicated, but is actually very simple once you get the idea. It's called depreciation. That's just a fancy way of saying, your building gets older, and the IRS lets you write off a portion of that aging each year. Think of your rental house like a car. Over time, it wears down. Paint fades, the roof ages, and the plumbing needs fixing. Even if your property is still bringing in money, the IRS sees it as losing value year by year. And here's the good part: that loss in value can be claimed as a tax deduction, even if you're not actually losing money. That's literally like getting free money. Let's say you bought a rental property for $275,000. The IRS lets you spread that amount over 27.5 years, so you can deduct $10,000 each year as depreciation. That's $10,000 off your income, without spending a penny. Studies have shown that depreciation is one of the most powerful benefits of owning rental property. It can lower your taxable income and help you keep more of your rental profits. But it's strange that many investors don't fully understand or use this benefit, which means they're losing money they could have kept legally. And that's why the best thing you're doing for yourself as a property owner is watching this video right now. But what if you're ready to sell that property? Don't rush. There's a smarter move that could delay your taxes completely. Hack 3. Swap instead of sell. So you've owned a rental property for a few years, it's gone up in value, and now you're thinking, maybe it's time to sell and buy something better. But here's the thing: if you sell it, the IRS will want a slice of your profit, and that can be a lot. But there's a smarter way. It's called a 1031 exchange, and it's basically a tax-friendly swap. You sell one investment property and quickly buy another one, and just like that, you get to delay paying taxes on your profit. Here's how it works in simple English. Let's say you bought a rental for $200,000 and it's now worth $300,000. Normally, if you sell, you'd owe taxes on that $100,000 gain. But if you swap it for another property, using the 1031 rule, you don't pay those taxes now, they get pushed down the road. You keep all your money working for you in the next property. According to research, a 1031 exchange is one of the best tools real estate investors use to grow wealth without constant tax hits. And the best part is, this strategy is completely legal and can be repeated over and over, building wealth over time. Now let's come back home, literally. If you manage your property or real estate work from home, there's a way to turn that into tax savings too. Hack 4. Deduct home office costs. If you do any kind of real estate work from home, like answering messages from tenants, organizing property repairs, tracking rent payments, or handling listings, there's a way that space can help you save on your taxes. It's called the home office deduction. Now, this doesn't mean you need to have a fancy office or be running a big company. Even if you're just managing 1 or 2 properties on the side, you might still qualify. The key is that you have to use part of your home regularly and only for that real estate work. That's it. For example, imagine you have a small desk in the corner of your guest bedroom. You don't use it for anything else, just for your property tasks a few times a week. That space can count as your home office, and once it qualifies, you can claim some of the money you spend on your home, like a portion of your rent or mortgage, electricity, internet, and repairs, as business expenses. It's a simple way to turn a small corner of your home into a money-saving tool. Just make sure the space is truly for work only. If it doubles as your Netflix corner or laundry folding spot, it won't count. And speaking of homes, did you know that sometimes when you sell your own house, you may not owe any taxes at all? Let's talk about that next. Hack 5. No taxes when you sell your home. Imagine you bought your house a few years ago for $250,000. Now, things have changed, and the value has gone up. You sell it for $400,000. That's a $150,000 profit. In most cases, when you make a profit like that, called a capital gain, you'd owe taxes on it. But when it comes to your main home, the house you actually live in, there's a special tax rule that helps. If you've lived in that home for at least 2 out of the last 5 years before selling, the government allows you to keep up to $250,000 of the profit tax-free. If you're married and file taxes jointly, that amount increases to $500,000. So in this case, if you're single and made a $150,000 profit, guess what? You don't owe any taxes on that amount. You keep it all. This rule doesn't apply to vacation homes or rentals, and you do have to meet the time rule. But for everyday homeowners, it's one of the most straightforward ways to save big when it's time to move or upgrade. Plenty of people don't realize this rule exists until they're already deep into the selling process. In fact, this tax break is often listed as one of the most valuable benefits of homeownership. Studies reveal that it's one of the best ways to legally reduce or even avoid capital gains tax when selling your home. It's like a financial thank you for simply living in your own home. So you see, saving money on taxes doesn't always require fancy tricks or complex strategies. Sometimes, it's just about knowing your rights and using the rules to your advantage. These tax hacks may seem simple, but when used the right way, they can make a big difference in your finances over time. And of course, everyone's situation is different. If you're unsure about which of these apply to you or how to claim them correctly, it's always a good idea to speak with a trusted tax professional. A quick consultation today could save you thousands tomorrow. If you found this video helpful, don't forget to like, share it with your loved ones, and subscribe for more smart money tips. And you can drop a comment below and let us know which hack you'd love to try out. Thanks for watching, and see you in the next one.